It's going to be a very interesting quarter to track, frankly, from the fact that the markets are at all-time highs, and this will be a big impetus for the stocks to rally from here on. So I've looked at multiple brokerages and come out with let's first look at the overall picture on what the overall quarter two is going to look like. In terms of overall numbers, it's going to be a strong quarter, but that's going to be largely dominated by domestic cyclicals. Not every sector is going to do well. If you look at the, I was just looking at the net profit estimates across multiple brokerages. Then for BSE Sensex, the net profit estimate is close to 19% YOY, but and 2% quarter on quarter. However, for Nifty, the net profit growth is going to be 23% YOY and a flat on a quarter on quarter basis. So that's the overall net profit picture. If you look at the EPS estimates, which most of the brokerages have put out, the number looks quite interesting for FY24. For BSE, the FY24, look at this estimate. For Sensex, the FY24 estimate is 3078, and for FY25 estimate, it's 3544. However, for Nifty, the FY24 estimate is 952, whereas for FY25 is 1076. So that's the overall numbers as far as Nifty and Sensex are concerned. If you look at the, if I just drill down to the sectors, in terms of individual sectors, there are few pockets which are expected to do well. That includes the likes of autos and FMCG, capital goods, NBFCs. They are expected to do well. Cement, FMCG, and healthcare. These are the few sectors which are expected to report strong quarter in quarter two. However, there are some pockets which includes large cap IT. There are some other sectors which will report the weak in terms of weak numbers. So that's one to watch out for. Consumer discretionary will be weak. Large cap IT will be weak. Defense will be weak. And chemicals will actually report quarter on quarter decline for this quarter as well. So that's the overall sector picture. Now, I just looked at individual sectors and a few things to watch out for. For example, the financials. For financials, there will be strong loan growth, but there will be NIM compression quarter on quarter for most of the banks. So that's a big takeaway as far as banks are concerned. But within NBFCs, I guess MFIs will do well, and the diversified NBFC, which includes the loan companies, they are expected to do well within the NBFC. So between banks and financials, you're going to see this dichotomy in the financial space. So that's the first one. Now look at IT. The top 6 IT names are expected to report a single-digit growth or a decline in terms of 0.8 to 1.5% and a flat EBIT margin. But that's not going to be the case for the mid-cap IT. The mid-cap IT is actually expected to outperform large-cap IT names in terms of growth in the range of 2% to 6%, and they're expected to beat on margins as well. So that's the IT sector for you all. Now look at the next big sector, which is OMCs. Now OMCs last quarter was quite interesting. It was expected to report very strong numbers, but the stock didn't do well. But this quarter, expect a sharp decline in profits because there is going to be a big hit in terms of diesel margins turning negative. So that's for OMCs to track. But gas stocks should expect a strong margins on back of higher volumes and lower volatility in the international gas prices. So that's autos and gas companies for you all. Now look at the autos. Autos is one sector which directionally should do well because input prices have gone down, operating leverages come in. So margins should improve for most of the auto names in quarter two as well. So that's auto sector. Look at the other sectors. The next one is cement. For cement, the volume growth expectations for most of the brokerages is between 12 to 14% as far as volume growth is concerned, but a flat EBITDA per ton in quarter on quarter basis. So that's cement sector for you all. Next big sector is pharma. Pharma is going to be interesting. It's been seen as a defensive sector, but this time the US facing companies are expected to do well because the generic Revlimid will come into picture and moderation in the generic prices as well. However, the domestic companies are expected to see some slowdown due to tepid seasonal infection as well. So it'll be a different quarter for pharma companies, so to speak. The next is consumer durables. Now consumer durables, again, it's going to be a mixed quarter. Some of the companies should do well within the consumer names. For example, cable and wires, they'll expect to do a strong quarter in quarter two. But within apparels, this was the indication last quarter as well. Trent is expected to be an outliner in this quarter as well. Remember last quarter after the results, the stock rallied 20%. So Trent is something to watch in the apparel space. The next is consumer staples. Again, it's going to be a very soft quarter, single digit volume growth and a mid to single digit value growth for most of the consumer staples. So no big surprise is expected there. And the last one is specialty chemicals. For the third, in fact, there will be another quarter which will report a very weak quarter in terms of weak demand and weak pricing as well. So that's the overall picture in terms of individual sectors. But clearly from a market point of view, I guess domestic cyclicals is which is going to drive the quarter two earnings.